Hello and welcome to Connect, the weekly podcast for the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I get to welcoming today's guest, I'd like to thank our 2024 President's Council sponsors. These are a handful of companies that provide a tremendous amount of financial support for the California MBA, in large part so that we can continue to be the strong advocates for the real estate finance industry before the California State Legislature and our regulators. So I'd like to thank this year's President's Council sponsors, and those companies are Amerihome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support in 2024. And with that, it brings me to welcoming today's guest. I'd like to welcome Rekha Siddani, EVP of National Credit Operations at Amerihome. Rekha, welcome.
Thank you so much, Susan. I am very happy to be here.
I always like to get started finding out how people got into the mortgage industry. So why don't you share with us how you came to be in the mortgage business?
Thanks for that, Susan. My academic background is in accounting and finance. So I started looking for a job, reached out to temp agencies, and one of them reached out to me regarding a loan setup specialist role. That, in another term, is a glorified data entry role. And that's how I entered into the mortgage industry. I was like in between. I wanted to look for something in accounting. It was taking too long for me. So I accepted this as a temporary position. 3 months into the role, I was selected for a 6-week underwriting boot camp and graduated as an underwriter. Once I started doing the underwriter role, it was intense. I learned a lot. It was very interesting. And there is no getting out of the mortgage industry once you've experienced it and tasted it.
Right.
Since then, I underwrote different products, learned different aspects of underwriting, compliance, moved into leadership, managed underwriting call centers, did condo desk, like managed condo desk. And I got to work under John Hedlund's leadership. Fast forward to 2013, John recruited me into Amerihome Mortgage when it was a brand new startup. And I grew my career along with the company, managed different roles in delegated underwriting, non-delegated underwriting, and retail underwriting processes. And that's where it started, and that's where I am right now.
It is, it's definitely, I hear that from a lot of people, it's definitely an industry where, boy, once you're in, it's just, there's so many things that you can do, and the work is fascinating, the people are fascinating. It's easy to get addicted to it pretty quick. And working with John Hedlund's a great mentor and somebody that, has done certainly a lot for the California MBA. I love working with John as well.
Yeah.
Rekha, you've had now a long history in the mortgage business. What would be your kind of your outlook for the balance of 2024?
2023 has been a tough year. We've all been in the mortgage industry long enough, right? This is one of the longest downward cycle we are all experiencing. And we manage our budget very tightly. We typically don't forecast for 2024, but based on whatever the experts provided forecast, we manage to that. So what we're looking at is tough first 6 months of 2024, and then maybe some hope for recovery in the second half of 2024. Housing inventory has been historically tight, and that's going to continue to keep the home prices high. And with rates probably holding at current levels for near future, it's going to be really tough for borrowers to qualify. And based on our expert opinions, the sales in 2024 may be slightly higher, with the new construction contributing to 30% of our total sales. And we're carefully watching the rates, Susan. Maybe not this year, but at some point when rates have a 5 in front of them, that's the sweet spot, then we will start seeing some housing inventory come back into the market, borrowers more willing to refinance. And I personally still believe that there are several buyers and sellers still on the sidelines waiting for the rates to come down.
We'll be ready for that time when we hit that magic spot, right, with those rates.
Definitely.
What do you find to be the biggest challenges today for mortgage banks' underwriting and appraisal operations?
Underwriting has always been the complex part of the loan origination process where there's a lot of understanding the borrower's character, their willingness to pay, their ability to repay, as well as predicting the loan performance. So with low housing inventory, accompanied by high interest rates, it's made really tough for borrowers to qualify. We see ourselves denying more loans now because the borrowers are not qualifying. And another issue that we are seeing both in California and Florida is the insurance. We all know obtaining insurance, timely insurance, and those premiums are pretty high, and that's affecting the DTI. And then that also has affected our condo projects approval process. Condo projects, making sure there's no deferred maintenance, there's no critical repairs for those projects, reaching out to the HOA management companies and trying to obtain that documentation. That's another challenge we've been experiencing, which we didn't have as much in the past. And the cost of overall loan origination process is high when you have a low volume market. And we're in the process of identifying a cost-effective technology which will help us mitigate these challenges. We recently added to our challenges table, I want to say, is the repurchases from the GSEs. Income calculation, borrower's income nature has changed from a few years ago till now. It's a gig economy. So identifying the stability and the likelihood of continuance has been a little challenging. And if you're following the appraisal thread, then eliminating the appraisal bias, changing the mindset of the appraisers to be more factual based on the appraisal commentary as opposed to subjective comments that really don't add value to the property. So those are some of the challenges that we've been trying to mitigate and trying to turn around with the support of technology.
Yeah, great summary, and couldn't be more spot on with both those. I hear the same challenges from a lot of lenders. Also, that I hear from a lot of our lender members and companies, just our associate members as well. Cybersecurity continues to be, of course, a big threat for anyone in business. What advice would you give to lenders about prioritizing the security of their data and information flow?
I'm not a security expert, Susan, but here's what I got. As part of being a bank, we're super sensitive to this topic. Obviously, some of our peers have been hacked, and you think we would have been able to defend, but just shows us how vulnerable we all are. So we're gonna have to make sure you're diligent about choosing the vendor and tools to protect ourselves.
Right.
And being a bank, we're also getting tested all the time internally, just random blind tests by our cybersecurity team to see who's going to click on that link. And they also make these links so legitimate or something that affects our personal feelings. You got a bonus check, or we're going to have an extra holiday, or something that's as silly as that. And we just need to be very diligent, be present in the moment when we are reading those emails and before we click on a link. And my advice would be to go back to the basics, have proper controls, make sure there's a lot of awareness and training to all roles involved and adopt a maturity-based control framework.
Doing that continual education and bringing that up is so important too, because to your point, you get it looks familiar and it looks like something you might, normally click on, and that's when everything is infiltrated. So I think that's great advice.
Right.
You
And on top
have
of
been
that,
what's that?
sorry, Susan. Well, I wanted to add one more point is on top of that, choosing your vendors who also have the same security standard as you is very, very critical as well.
Right. It's a good point. That's a good point. Something, consistent goals with what your companies are as well. So we had talked at the top of the podcast, you've been at Amerihome since the beginning. What are some of the top priorities for Amerihome in 2024?
2024, the pattern is going just like the 2023. We've been a low-cost provider for so many years, and the margins have compressed over the years. So driving costs out of our loan acquisition process has always been our number one priority. And we plan to do that by automation this year, outsourcing where it makes sense, then using other technology and looking at AI type tools to leverage data and systems to continue to drive those costs out of the process, keeping our pencils sharp for our clients. And one of the added priority is to reduce the friction point during the customer experience. We are in the process of purchasing loans. After repurchasing loans, there's still a customer continuity that happens with our post-closing process, with our post-purchase QC process, with our servicing channels. We want to make sure this experience is very seamless to our customers from the loan origination purchase as well as post-purchase process. So those have been our priorities. And my personal priority has been to bring automation back into the underwriting wherever it makes sense. And we have those challenges where we want to be accurate and providing our underwriters the tools so that they are able to make unbiased, accurate decisions throughout the process.
That's a great update. That's a great update. I noticed recently you have received the MBA's Path to Diversity Scholarship. Congratulations on that. Can you tell our listeners a little bit more about that program?
Thanks, Susan. I'd be happy to. Mortgage Bankers Association provides scholarship up to $2,000, I believe, to qualified applicants who want to grow and contribute to this industry. Whether you want to attend MBA conferences or take courses towards getting industry designations like AMP, CRU, all the way to CMB, you can use this scholarship. In this time of period where most IMBs are not making money, encouraging your employees to take any courses or attending a conference might seem like out of your budget, but this scholarship can really help your employees get that. And it is available to all Mortgage Bankers Association lender employees. And I plan on using it for the MBA Future Leader program. I did in the past see MBA Future Leader program, which really helped me start building that network, the connections, learn more about other aspects of the business, looking at your profit and loss. It was a very fulfilling experience for me. And again, something very similar now I am doing at the central MBA level.
That's fantastic. Congratulations. That is a wonderful program that the MBA provides. I'm happy that you're taking part of that. And Rekha, thank you so much for being on Connect Podcast. It's been a pleasure.
Pleasure's all mine, Susan. And thank you for everything you do.
And thanks to all of you for joining us today on Connect. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.